guest is here to talk about private markets and in particular pre-IPO investments as an alternative asset class for investors to consider before going public. Now, although pre-IPO or secondary investments are well known in the developed markets, this asset class is still fairly nascent here in South Africa. Jaltech Equity Capital Investments is a pre-IPO investment vehicle created to provide access to this asset class for South African and other investors. And Roberto Ferreira is going to explain the investment opportunity in getting into pre-public listing. Roberto, over to you.
Thank you, Michael. So today I'll be speaking about pre-IPO investments. And what I mean by that is investments in large, well-capitalized private companies, predominantly in the US, seeking to list in the near to medium term. And so what we offer as Jaltech is an avenue for South African investors to access US-based pre-IPO shares in high-growth, disruptive innovation companies. We also offer an opportunity to co-invest with the world's leading venture capital and private equity investors. And some of these names are Sequoia, Andreessen Horowitz, Accel, Founders Fund, Kleiner Perkins. Now, although these might not be household names for our market, they are early stage and late stage investors in well-known names such as Google, Apple, Instagram, Uber, etc. So that shows you the quality of these sorts of investments. Now, this is a slide which we think is quite compelling. It's really a slide indicating the post-IPO 12-month returns for a period between 2010 and 2020 for private market returns. On the left is the returns for IPO investments made at the IPO point. And on the right are the investments from the last pre-IPO financing round. And you can see that investments at IPO generated a yield of 37%, and last pre-IPO financings generated a yield of 270%, a 7.3 times multiple. So highly compelling. In terms of our criteria, we target a minimum valuation of $1 billion per company, and in fact, our portfolio has an average of $4 billion per company. We seek companies with a trading life of a minimum of 5 years, with an aspiration to IPO in the near to medium term. And they must be in the fourth industrial revolution space or be disruptive innovators with compelling moats and high barriers to entry. In terms of our track record, we're already in this space through a portfolio of 20 investments. Our main sectors are software as a service, financial technology, otherwise known as fintech, data analytics, cloud infrastructure, biotech, cybersecurity, and food and agro technology. We made these investments in the last quarter of 2019, so 2.5 years ago, and we've achieved 9 exits, yielding a gross realized return of 267% on these exits, and a 71% gross realized return on the overall portfolio. So our addressable market, bearing in mind that one of our criteria is only targeting companies valued, private companies that is, valued at $1 billion or more. This pie chart gives you an indication of the international spread, and as you can see, the majority is in the US. At 51%. In second place is China and Hong Kong at 18%, and the rest is fairly evenly spread amongst the rest of the developed world. Now, in terms of private market scale, there have been significant developments. In 2018, the number of unicorns or private companies valued at $1 billion or more was 260 worldwide. That represented a market cap of $900 billion, and that has since grown to in 2021 to 762 companies, representing a market cap of $2.4 trillion. And moving on to private market assets under management, in terms of Morgan Stanley's research, they estimate that in 2021, private market assets under management was valued at $7 trillion, and they're forecasting a 13% compounded annual growth rate of private market assets to grow to 13 trillion by 2025. So highly compelling growth. This slide represents, is a visual representation of our addressable market. All of these companies are beneficiaries of pre-IPO secondary market investments. Some have gone on to list, and some of those names that you would be familiar with are Tesla, Uber, Robinhood, and Palantir. The rest, as I say, are aspiring to move into the listed space in the near to medium term. So aside from immediately available pre-IPO investments, we as Jaltech are in a position to reserve interest for pre-IPO investments that will become available in the near to medium term. And as such, we have reserved interest to invest in a number of names, including Databricks, Klarna, Chime, and Netscope. And why we've identified these is because we believe these will proceed to listing still within 2022. In terms of co-investment rights, investors in the platform also have the right to co-invest in specific or individual assets that they so wish, and bespoke arrangements can be made. Co-investments will be pari passu or have pari passu rights with the platform, and co-investments will be subject to thresholds. And one of the most common questions we get asked is what is our exit strategy, because these are private assets and perceived to be illiquid. And the overwhelming mechanism that we see is public listing by IPO, initial public offering, and a significant minority through direct public offerings. But that said, the secondary market has developed significantly in 2020 and 2021 to the extent that allocated capital worldwide for private assets is estimated to be $2.5 trillion. So this represents a significant and very deep market to exit into. And then the last mechanism we see is, ordinary M&A activity through a corporate takeover. A summary of our key terms, specifically for retail investors, is our geography, as mentioned, is primarily in the US, but we are looking at other developed markets. The instruments we invest in are really just shares, common stock and preferred stock. Our target sectors are the fourth industrial revolution sector and disruptive innovation companies. Our current target raise for retail is $4 million. The target number of initial investments would be 10, but we think realistically we'll achieve a double that. And our exit pipeline is a maximum of 5 years, but we believe we'll start exiting even in the first year of investment. Our target returns are north of 25% in US dollar terms, and our minimum commitment is $50,000, which is very modest considering the typical domain entry level for this sort of asset class. All of our companies would have ESG policies or frameworks in place, and the currency of investment would be in US dollars. So to summarize it all, our platform offers offshore pre-IPO exposure. As mentioned, a difficult asset class to get exposure to. We offer the opportunity to co-invest with the world's leading venture capital and private equity investors, targeting high returns at a low minimum investment. And these are our contacts, and we welcome further engagement.
Roberto, thank you very much. It reminds me of that old joke in private equity. How do you spot a general partner who walks into the room? They're the first ones looking for the exit. And I mean, it is a big part of the private equity strategy. You've got to know not only what asset you're buying into, but how you're exiting that. So to see the 9 exits, I think, is seriously impressive. We've really just got time for one question. How do South African investors actually get access to these assets? How do you get access to these assets?
Well, a few years ago, we saw the opportunity to buy in through specifically, mainly in the US market. and there are platforms available for retail investors. They have to be qualified investors, which we are one, and we are packaging a platform specifically for South African investors. Typically retail, but we are looking to expand into the institutional space as well. And so we have the ability to package these for South African investors. And, you know, the levels that we're looking at investing are well within the sort of exchange control limits. We're also considering the changes to Regulation 28, which I think is quite exciting for the space as well. And so really, if investors are interested in further information, please do contact us.